Good morning. Today is Thursday, November the 2nd. The time right now is 8:47 in the morning. Overnight, we have the release of the FOMC meeting, and this is causing a little bit of excitement in the marketplace. And this has basically boosted equity prices because the Fed chairman came across as being less hawkish, and traders get the view that the Fed is probably done hiking for this year. So this is causing equity prices to actually rebound strongly. We can see that in the cash market, in the Dow Jones, we can see Dow Jones is currently at 33,337 overnight, and this is the highest it has traded since mid of the last week. So we can see this over the week itself. So far, we are already 3 days into the new week, into a new month, and we can see that the equity market has staged a dramatic rebound. So this could actually continue further on sentiments, and there's a very good chance that the market may actually go in to test the 34,147 high that we saw in middle of October. And in the S&P 500, we also see the same thing. October have seen a dropped to 4,103.7 in the S&P 500 cash index. We can see last night there was a high at 4,245.6, which is well within this bracket of a pocket of prices which are previously highlighted. That could be an area where selling interest may re-emerge. But based on sentiment, it looks like this level may not be able to hold. More likely, the market will go and challenge the 4,400 levels going forward. And over in Asia, we can see that the Nikkei, let's see, look at the Nikkei. The Nikkei has also rallied very strongly this morning. In fact, Nikkei actually have rallied 2% so far. And based on closing price to closing price, we can see the market is definitely gunning for 32,290 to 32,520 levels, which is the area of known supply. Okay, the high here obviously is the 32,660 in the futures contract. So do look out for a challenge of this level and probably into this breakout of prices at 32,300 to 32,500 levels. Over in Hong Kong, market has not reacted yet, so we can see that there's a very good chance Hong Kong market may actually follow through with a rebound to retest the 17,590 levels in the futures contract. The dollar is dramatic. The dollar is currently falling like a rock. Okay, we can see that just before the FOMC, the dollar index was at 107.11, which is not far from the year high at 107.35. Now, on the back of the FOMC meeting, and especially after the press conference, the market has been selling off the dollar. So we can see an unwinding of long dollar position, which threatens to actually topple this very bullish outlook in the dollar itself. So the immediate focus will be a 105.90. If this level cannot hold, probably then we can see the market testing the 105.36 to 105.53 levels. So of course, in this in the face of a unraveling of the dollar, we can see all principal currencies has staged a rebound. We can see that in the euro versus the dollar, we can see the market actually was trading 105.17 just before the FOMC meeting, and you can see there's a big spike going on. Currently, the 105.97, so I think it's only a matter of time market will retest the 106.70 to 106.95 levels in the euro versus the dollar. Sterling too has a bit of a reaction too. We can see the market has done a 3-wave rally to 122 even and come back to test the 120 121 levels, which it did. Okay, and briefly the market was trading at 120.95, and this morning we can see the market is up 100 pips to 121.88 levels. So there's a good chance it will blow through this level to challenge the 122.88 or perhaps even 123. Okay, so do look out for further strength in the currency itself. Aussie is doing very, very well right now. Aussie right now has surged to 0.64 levels between the 0.6424 to 0.6445 bracket, which previously kept this run. So we want to see how the market reacts here. Is the market going to blow away this level to challenge the 0.65 levels? Okay, now dollar yen too is also unraveling. This is not definitely a intervention. The market is just reacting to long unwinding or long dollar position. Now yesterday we can see the high traded 150.171, which is the year high so far, which is not very far away from the last year October high of 151.94. So prices currently is at 150.45. They are about coming very, very close to test the most immediate area of demand at 150 to 150.30. So we want to see how market reacts here. Most likely it can hold, and because the dynamics in the dollar yen is very different from the rest of the currencies because of the interest rate differential. Although the Fed has basically maintained interest rate unchanged, but still the difference in interest rates between the US and Japan is quite glaring, and this is actually why the dollar yen has been so strong. Okay, in dollar Canadian, we can see that the market may have well peaked at just under 139. Currently, market is trading at 138. 138.32 levels. So the immediate level that may actually hold this market is about 139, 138 levels to 138.36. So we want to see how market reacts. If market punch through this level, obviously the next level will be at 135.70 to 136. And over in the precious metal, we can see precious metal remains very much unchanged, although there was a marginal dip to $1,969.90 for a while. But by and large, you can see that the buyers did not bail out of precious metals. Of course, a dollar that is coming off is actually quite conducive for precious metals. In fact, it is going to be conducive for commodity as a whole. So this, on top of the tension in the Middle East, should actually be give the precious metals a slightly bullish bias going forward. Silver also held out. Market low was last night at $22.53, currently trading at $22.97. So this is also underpinning the market. I think it's going to be a good chance. The market has been consolidating here and is setting the stage for a surge to the upside beyond $23.70. Over in crude oil unfortunately is coming down. And this is at $80.27. So technically speaking, right now where we are, the crude oil should actually hold because there is a bracket of prices that has previously shown to have held the market. The level is $79.31 to $80.80 basis the CFD contract itself. So if this market cannot hold, there is a possibility of a three-wave equality move to test at $76.31. I would love to see this price because I'm waiting to buy. Okay, and then over in Bitcoin, we can see there's a major surge going on. We can see market punch through the October high at $35,132.75 to register a new high. As we are speaking, there is a marginal high traded. This is $35,672.12. So this is setting the stage for further gains because I was hoping the market will come back down again into this level, but it did came to this level at $32,552 to $33,554. Okay, so we can see that the prices actually managed to hold here and it's likely to propel even higher towards the 38,000, perhaps even 40,000 level range before we see a significant pullback in the Bitcoin prices. So this is all I have for you for today. Now, don't forget, tomorrow we have the non-farm payroll. It's going to definitely cause a lot of volatility going forward. So be very careful trading tomorrow. Bye-bye. Take care.